Well, I think... Can I hear myself? Just got to double check. I think I've changed my setup real quick. Well, can I hear myself? Okay, we're all good. Well, ladies and gentlemen, as I find a way to fix my video capture device, which should be somewhere, we're just gonna get set up, check on some charts. Let's just write XLE because energy. I don't think I have. No, I don't. Well, as I sort this out real quick, feel free to come along and join us. We haven't streamed in a while, and we haven't been streaming regularly. It's just been difficult to kind of fit some time in. We've kind of went as things go along. But there's been the Archegos capital explosion. I don't think my camera's working. Let's see. Let's try it. If I do this. Are we here? No. We might have to go on today without a camera. But it's not a big deal. Highest FPS, capture audio only. Or add video capture device cancels there. Video capture. Okay, we are here. It's just the wrong way around. Flip. Alright. Let me move this here 1 second. My picture is maybe a little too big. Let's fit it. Alt and adjust. And then there. Are we good? We probably are good. Well, we haven't been doing a live stream for a while. This is the first, probably a week. But I wanted to kind of look at some stuff. So I will put myself very tiny in the corner. Are we good? Got room. There we go. Okay, well, let me set up the chats and all that stuff. So I can see if there's anything being said. And I'm going to post about this on Twitter before we start talking about what has gone on all this week. Just going to double check that it sounds alright. Let me set up the chats and all that stuff. Alright. Well, tweet live on @ trading view. Hear that noise? This is what happens when you have neighbors that are students. Trading you right now, talking about the Archegos blow up and recapping some charts and trading ideas. That's a lot of screaming. I wonder if that can be picked up in the microphone. Link is here. Welcome to all the people who are listening right now. We're just about to dive deep a little bit. Talking about the... Yeah, that's good enough. Alright, so let's probably pull up the most interesting names. Viacom, Baidu. I just want to put Discovery in here too, which is this guy, I think. Shouldn't matter too much which shares I'm using. Yeah, Discovery. Who else got done? Tencent Music, TME, and VipShop, VIPS. Shopify did 5%, but not really much. So we got the biggest names that were involved in this drama. Now, pull up a little picture real quick. I want to see if I can access the YouTube, because that's where this uploads afterwards. Access the YouTube. If my audio is bad, just feel free to say. So, to talk about the situation that's been going on, there's a big hedge fund by the name of Archegos Capital. You've probably heard this. If you haven't heard it, we'll tell the story real quick right now. Well, Archegos Capital they had a book of about $16 billion. That $16 billion, they'd use leverage to get to a value of roughly $80 billion US. What happens when you use a lot of leverage? Well, when things go right, you make a lot of money, as they did in these companies on the way up. Look at that. This is a 45-minute chart. Let's put a daily chart to just show how short the period of time in which all of this kind of rolled out. You can see here, they probably were aggressively buying. Viacom is one example, around the 30s, the 40s, went all the way to 100. These leverage buyers, Archegos Capital is probably even one example. We won't speculate, but who knows? $100. As soon as they start having to sell out, or there's an issue where suddenly they have to dump a large amount of shares on the market. I think it was 45 million shares, and the 45 million shares at $45 a pop is a lot of money, right? That in 3 or 4 sessions sent their shares down over 50%. They were at, what are the lows? $39.81. Something crazy for a business of their size. $29.8 billion right now is their market cap. That's as of their close for Tuesday's session. That's today. They have been dumped hardcore. Now, Archegos Capital blew up. This wasn't just the only company they sold out of. Viacom. You can see the same trend on Discovery. Baidu, relatively similar as well. Tencent Music. That one was an ugly candle. Don't know if I've ever seen that kind of daily move on this stock. 27% in one day. The next day, didn't make up for it. Another drop. 12% as well. Look at that. $16 to 22 at highs. Some move. About a 30% move. VipShop as well, quite similarly. 46 down to lows of 24 to 30. They've all bounced somewhat. Now, I haven't traded either companies, or either company in either way, to be honest, because the problem is when one company, one hedge fund, can move a business this much, you worry. You kind of get fearful of if there are more across the market. How sensitive are many growth stocks, companies that are trading at high premiums to their earnings? How sensitive are they to a sellout, an issue where a large amount of investors, or just a single investor or a group of a couple of big investors, want to get out of a lot of shares, but the market isn't taking up that volume? Baidu, for example, the main day of this was, I think, here. Yeah, I think it was there. Let's double check. It's the day where it closed around 204. No, okay, so the 25th of March 2021, that day, the end of the session, you saw it kind of crash on the open and then recover to actually being up for the day. That day, the 26th of March, the end of the session of 25th, you saw just before 26th had started its session, there was a 15 million share, I think. 10 million shares were sold at $185, or they were trying to sell them at $185. The shares closed 204.5 the day before. So obviously people would be thinking, they sold all that at 185. We didn't have information about why they were selling and why it was 185 and not near to market price. Obviously, when you sell a lot of size, you have to get a discount. Now that kind of had people thinking, wow, some big guy is trying to get out of 185. I should probably sell too. Who knows? Where do they think it's going down? Seriously? And that kind of had a bit of a battle between the folks trying to buy and the folks trying to sell. And then shares recovered a little bit when we realized it was one fund that blew up and a couple of other hedge funds linked to a couple of banks. We had Credit Suisse and Nomura. I think their losses totaled around $6 billion on their end as well, with exposure to this Archegos Capital blow up. Imagine a hedge fund that goes from, I think, is it 200 million to $15 billion. Bill Huang grew it up himself. He built it up from nothing to this. And then from 15 billion, it blows up just like that. The winnings almost seemed artificial, inflating these shares that were heavily shorted kind of thing. Tight floats. It almost seems like market manipulation. I think he had a fee or a fine or something of a good couple of million that he had to pay. Larry is broke. Welcome. How are you doing? Welcome to the stream. Hope you're having a wonderful, wonderful day. We were just looking at the whole drama there, but I kind of want to look around the market and just see what's happening. A sector-wide look's probably good. China's ETFs is just something I want to kind of catch up on. Exactly how things are going there. Let's see. So, what was this recent correction? They bounced a fair bit. Just keeping a little update on what's going on. It doesn't seem that China's fallen. Well, some of the indexes have not fallen lower than that previous point on our last stream. But it seems like emerging markets as a whole are quite weak from what I haven't put on stream, but I've looked at. I'm assuming these bounces aren't going to hold up. What do we got? Healthcare index. I should probably separate the components to materials, utility. Well, we're back to utilities. CQQQ is their tech side. That's a big mover. I don't think it would say the market cap because this is just trading view, but we could work that out ourselves. Look at that. Interesting level of support. If this fails, which I reckon it will, Chinese tech's probably going to take a hit. And maybe it's more ideal to rotate out of Chinese tech and into the old school value stocks. Let's have a look. Utilities, ironically, are generally the area which does well after a crisis, but also does well when you have that rotation from value, when you have that rotation from growth stocks into value stocks. And what we can see is, look, utilities, 6th of November to, this is just a random period. We should have a clear period when we're normally measuring. But look at that, 1450 or something, all the way to 17. We've had a rally here of almost 10-15%, something like that. And with the CQQQ, we've had the same kind of move, but in the opposite direction. So my thoughts are Chinese tech probably is trying to bounce here, trying to find a bit of support. It's probably going to fail. Utilities probably going to rust a little bit as they have. Hold strong, break into new highs. Not a direct correlation, but just a bit of curiosity at work. Small caps trying the same. A bit more aggressive bounce though this time. And then probably reverse lower as well. I don't know how long this rotation will last, but I think it will be interesting. Hey Hidden Leaf, welcome. Hope you're having a wonderful day. Welcome to the stream. This is a stream by Quantium Research. I'm Ryan Keir of quantiumresearch.co.uk. We're just chilling. We're looking at China's sectors. In fact, we were looking at the Archegos Capital blow-up stuff and some of the main companies affected, the charts of them, and maybe where they're going next. EW3LCH38, how you doing? Welcome. Cautious Head 61883, hello. Hope you're doing okay, man. Welcome. Nice to see so many new faces. We haven't streamed in a very long time, but that is just all good considering we're getting a stream in today at least. Let's see. US sectors, or more specifically small cap sectors. We can go deeper. Actually, before we do the small cap sectors, let's look at SPDR. So S&P 500 related, or specifically the components of its sectors. So we've got communications holding strong. Interesting there. Communications is generally quite techy, but it's high beta. So market doing well, this doing well. Makes sense. S&P 500 made new highs despite that whole Archegos capital blow up. It's like the market doesn't care. A couple of stocks down. Well, the market doesn't rely on a couple of stocks, which most people tend to forget these days. XLY is consumer discretionary, generally quite similar to what we mentioned with communications. Tech is a little bit more aggressive in terms of its sensitivity to the upside, but also the downside. And this is one where if you have a rotation out from growth into value, it doesn't necessarily mean that companies in the growth category, tech for example, are going to fall. Instead, they might just rise at a slower rate than old school value stocks, the likes of financials. If we had a look at JP Morgan, for example, total random example, JPM, you can see all-time highs, and the shares have been staying around there. Look, it's building a nice little range here. Clear box, 146 to 157 or so. Interesting to see if they go higher. I assume so. All-time highs broken above those market top levels as well, and seems to be holding quite comfortably above there too. So for tech, I assume either there's going to be some form of serious breakdown or a little bit of support, and then value just outperforms. So it's not that both are going to fall, it just means that one outperforms the other. So where do you put your money is what you should be asking yourself. Generally in the outperformer, and then rotate accordingly. All right. Everything's okay there. All right. Well, so from the real estate perspective, let's see. That seems to be a more healthier recovery. Not to levels of highs back in Feb. Very close, but not there yet. 3.5% or so off those highs. This is generally the overall market kind of thing. That is not really something that could be affected. Real estate is something that can be strong, assuming that the economies, the governments can support. In the UK, for example, we've had a lot of stimulus focused on the property market. Stamp duty's been taken off, which means less tax to pay for investors. Buy up as many properties as you can. There's not enough properties being put in the market. Things are good. This is the US side, though, which is a totally different ballgame. We can see that there's no highs there, but it's making recent highs. It's just going to see if it can make all-time highs. I wonder if that sound behind me can be heard. This is the neighbors situation. Wow. If you could short neighbors, I'd be there. Let's see. Amex Consumer Staples Index. Okay. These are generally like we mentioned. In breakout, positive, nice to see. Most sectors across the board are not only in breakout, but they have all-time highs that are being made, and they're holding quite well too, which is cool to see. Healthcare, all good. Healthcare is a rotation in, which is nice. This is the Treasury bond ETF. I assume it drifting is correlated with stronger markets as a whole. Look at that. 2020, coronavirus, buy up as many of these as you can as a Fed or a central bank or whatever, and then they drift when the market recovers. Ironically, they're still higher, which means there's probably a lot of debt on those government balance sheets. But what happens to that debt? It just disappears. Poof, it goes away. I hope the chat is working as it is there. I think so. Where can I? Yeah, okay, the chat's all good. I'd like to hear everybody's thoughts as well. What do you guys think's going on? What are the hot places to invest? Utilities, you'd have expected to be in a breakout, but nope, not yet. Maybe that's something we need to see if there's more legs on this reverts. Gold is being battered. Another gap down for the last session. Probably gonna go retest this zone here, 147, which means gold is probably going towards 1680 or something. I don't know where it is now, but that's the next level I remember from my notes. Financials, as we said, breaking out like crazy. These are bonds again, 20-year treasury bonds. Bond prices decrease, interest rates increase. So with these decreasing over the past couple of weeks and months, that means the interest rates on such longer term lending has been increasing too, which means that's not too positive for the economy. Generally, tech stocks seem to be beaten by that. Banking stocks, financials, all that, who rely on making their money from higher interest rates benefit. But the rates aren't going up too high. They're just going up a little bit. This is why the TLT has fallen. That's the ETF for the 20+ year treasury bonds. We've got materials. Very strong performance from materials as a whole. That's interesting to see why. What are the main composition? Because it depends on what companies represent that sector rather than the whole thing. Hidden Leaf says working. Oh, what you up to, man? What are you working on? What else are we looking at? Industrials. More highs. Very, very positive. Confirms that whole growth decline versus value. Or should we say value is taking over growth. We can't ignore the facts. As much as I don't understand why people would invest in most banks right now, fundamentally, probably wouldn't make sense. You follow what is the fact. And the facts are that value is outperforming growth. We don't know how long this could last. The reversion or the switch could occur any time. But current moment, it just looks as if things are changing. We've never really seen value stocks do so well. But we did just come out of one of the worst crises in history, economically speaking. Not talking about the impact on the stock market. Commodities seeming to reverse here, but still at all-time high, or not all-time highs. Highs versus that market top period. There's a lot of noise behind me. You know what happened, Fundo? The stream. Nah, that's chill, man. That's chill. I hope you're doing good. I don't know what time it is. Where are you based, Hidden Leaf? Where in the world? I don't know if you're gonna hear that noise in the back. I don't have a problem with it, because I can sleep perfectly fine with noise or not. I've got some neighbors on a couple floors above me. I think because the coronavirus rules have kind of lessened a bit, this is party time. So, you know, they deserve it, man. Being locked in is not a positive thing. Nobody deserves to go through that at all. Let's see. Commodities, yep. Energy, strong, but will it last? I assume this includes energy stocks rather than the commodity itself, which is a volatile one. We can see, even in normal market conditions, some of the strongest years we've ever had, energy stocks haven't been so positive in terms of their performance. Look at that. 2014, that's obviously when oil was over $100, as one example. Natural gas and stuff crashed. So on a longer term trend, we're in a downtrend. But in the short term trend, things are looking a little bit better. You'd have been going along around here, consolidation. Now you're paying 20% higher. Gold has been consolidating all day. Yeah, where is it? XAU USD. Wow, it's crashed, man. I don't remember it being this low. I don't follow gold too much. It's not something where I feel that there's a clear trade. Beyond to the downside, but I didn't see much of a return. Shorting gold miners is great, but just there's still a bit of exogenous risk to account for. Look at that. If it fails that 16, what are we talking? Notifications? Yeah, sure, you can show notifications. Oh, C. Walk Jr. 78. Thank you for the follow. Appreciate you. FLUSA. What's happening with... Oh, no, you're from Florida, USA. Do you know what's crazy? When you trade for so long, when you see someone type like that, you think of a ticker symbol. So I thought when you said Florida, in the US, I thought that was like Foot Locker, because FL. I think that's Foot Locker's ticker symbol. Yeah, gold I reckon's going down. What are we thinking? Clear zone, 1500. Yeah, 1500's a sweet spot. Look at that sell-off though. Oof. 2k to there. I must say I was wrong about gold. But I wasn't confident enough to put some money in it at least. FTSE 100 companies. Ooh. 100 largest companies in the UK. We're having a mega review of the entire market. This is something I would do in my own time. With a couple spreadsheets on the other side though. Let's see. Fresnillo dumping. It's almost all these gains from that silver rally have been beaten up. Archegos. Let's see. That's reversed. Clearly. I think on the wider trend of things, it's still valid. Still worth 15 billion, but a worthless company. What a world. SVT, 7 Trent. The funny thing is, right, I've seen FTSE 100 stocks so long that if you only showed me the ticker symbols, I would literally tell you what the whole company name is. Let me cover it. FRES, Fresnillo. PNN, Pennant Group. Octo is Ocado. SVT is 7. Wait, I don't even need to cover it because it doesn't say the company name. Why am I doing that? 7 Trent. BATS, British American Tobacco. Polymetal International. Yep. NG, for us, hover over it. National Grid. Yeah. SSE, Scottish Energy. Well, that's the full name. AZN is AstraZeneca. Yep. DCC's Dixon Carphone Group. No, it's the different. Okay, I take that back. I'm almost there. Couple wrong. AVV is Aviva. Yeah. RTO is Rentokil. RB. Oh. Reckitt Benckiser. Yeah. AVSD, Avast. IMB, Imperial Brands. FLTR, Flutter Entertainment. UU is United Utilities Group. LSCG, London Stock Exchange Group. ULVR, Unilever, HIK, Hikma, Jet Group. What do they call it? Jet 2. No, wrong one. Okay. Yeah, actually, I'll take that back. I made 2 mistakes. Let's head off from those. Let's see the risers. Who's outperformed today? Let me guess. Banks. Yeah, Barclays Bank. Oh, that is some outperformance. One thing I regret is not buying banks when I had this signal. Just don't sleep well holding banks. Philperp has been crazy. What's Philperp? Oh, it's crypto. I see. Wow, that is something crazy. I'm not too familiar with the crypto scene. Very new as well. Wow. But clearly a lot of money to be made in that stuff. With these kind of rises. Look at how boring what I trade is, eh? I mean, with leverage, it makes it worthwhile, but there's a lot of risk. We got a notification. Rem US, 77 US. Thank you for the follow. It's nice to see some premium folks as well. Big love to everybody. Are we all good? Let's see what the old Twitter's saying. On a plane. $10 million doing something stupid. There are some cool threads sometimes. Israel's vaccinated 55%. Whoa. A lot of stuff. In Thailand, you can get a 7-night holiday in a beachfront 5-star resort in south of Thailand, that is, with the half-board. That's quite cool. $85 a night. That's very good. That's amazing. Well, I know where me and the boys are going. Oh, I wonder if anybody else is planning on a post-COVID holiday. I'm waiting till the COVID rush the opening up rush is over, then I'll go. It might be more expensive, but you'll get less just packed flights and everything. It's gonna be weird going on a holiday after this stuff, but it will be well deserved for all of us. 171, 75 on Melrose. Melrose being an outperformer today, not sure why. Probably news. HSBC, bank again. Generally though, if you look at an index, most of its performers tend to take the same pattern. So if you're fixating yourself upon one company, the main reason why you are is to do with you either like the company's financials and you think it stands out versus anyone else, or you're just making a huge mistake. I like Standard Chartered. I really like Standard Chartered. Let me just put this in, because I need to, whilst I don't really have any clear trades for this 10k portfolio we're doing planned, I've been super occupied with the site and stuff. I think I want to keep the money invested. It's better have the money invested than not. Yeah, easy trade here. Everything looks really nice. Just beautiful. I like that. Yeah, I'm going to set an alert. Let's see if we can get clear break above. I want to look at the financial picture a little bit more. See why they've underperformed the other guys. I'll do an alert to retest those highs. So stand greater than 517. All the highs for today, yep. New idea. For long. Gap though. The whole thing is very interesting. I want to look into Standard Chartered. They're mostly EM. That's what is something I'd be curious in understanding. Because we got this portfolio. I have cash in my own portfolio, which I'm still trying to figure out exactly where I want to allocate. It's a choppy market. But the 10k portfolio we've put for the streams and all that, why not have that money working as well? That's content, all that stuff, and also it's better have it working than not working. Obviously not for the sake of it though. So we have one investment holding that we're actually down on the 10k portfolio. I should have put it in the shares account because we have to pay margin fees even though it's a long. But that's called CNA. And we had a good candle literally today. That needs to continue into tomorrow. We close above 53, we're intact, and we're targeting a gap here. Opening of the gap, end of 69-ish, and the opening 66. So really, our 54 entry, there's 20% in there. We have about 6,500 shares, so 3,500 pounds. Let's say 15%, we can net 500 pounds. Right now we're down about 150 pounds after fees, but this is something I could be holding for a couple of weeks, even with the margin fees and stuff. I just kept them in the same account because it makes it look nice when people look. They say, all right, you know, this is how much you have in your account as a whole, instead of one's got this much, one's got that much. Just pay the couple pounds to make it look nicer. So even with that, it could be a good situation. Very choppy investment. And it does have a fair amount of res on the technical side. But financially, I see a turnaround. I see a chance to reinstate a dividend. I looked at a lot of financials for these guys. But I believe, assuming it can hold above 50, the momentum's there as well. Reinstate a dividend, huge gap up, fill the gap, simple. And they will reinstate the dividend even though they can't afford it. That's just how these businesses tend to work. Reinstate dividend, company does amazingly, raises money, and then changes its business plan further. So whilst reinstating a dividend is a bad idea, in doing so, if they execute it correctly, shares can be near pre-pandemic levels, which were around 80 to 90. No, actually, yeah. Let's say the lows here, the 60s, but went to as high as 90. They can get right back to those levels, but also change their entire business, which gives them a lot more upside. I like to hold them until things change. At the moment, I'm comfortable. I got a risk that is max, this 50.46 here, but I had it at 48.9. What I probably will do is either get stopped out at 48.9 for now, or it breaks, reverses, and we just let it ride. Keep the money working. What's the harm? Boohoo! Another company. I love the financials for these guys, but there are so many little bits that could go very, very, very wrong. But if I could get some form of major overreaction, a sell-off, then I'd be buying them up. I think this whole 3 legs down on that whole first COVID, second one was 133. What? That's crazy. People were selling off a company that would have benefited from international lockdowns. That's just de-risking. No reason. If I'd seen this, I'd have been buying. That's what upsets me. I'd be comfortable buying now, but my risk is just a fair bit. 100 points. 30%. My reward isn't that clear to be that much. So I'd wait, get it cheaper. Get some, if there's a scandal or something, get it cheaper. And hold. I could hold this for 2-3 years. I see a lot of upside. I like how Boohoo approaches their management teams for each particular division. PLT, for example. They're bringing on the right people for social media. And that's why Boohoo's now expanding into Australia for its Pretty Little Thing business, which that's a whole different business, and it's hitting. PLT's hitting there. But it's not being shown in the financials yet. I modeled it, and it just looks amazing. Australia, for example, and there are other markets too. And there are other products. The Boohoo Man side is literally becoming the next stop for men to buy clothes. And sometimes girls use it as well. Boohoo Man has oversized clothing too. Boohoo Man, folks are buying it instead of buying from Primark. Convenience, and generally it's the same. Small, medium, large, X large. You know your size, you do that. You don't need to wear it too much. And they have a good refund policy. They still make a ton of money. I love this company. Honestly, as of this pandemic, they have become a really, really attractive business prospect for me. I can see their sales growing more than they've already said, and I can see them growing even after the pandemic. I don't think people are going to shops. Nope. By the point where you've learned of a new business and it's become the big thing, it will be the main one you use for convenience. Not because of COVID, not because shops are closed, because it's cheap, it's affordable, and it's good enough quality. I've used Boohoo Man clothes myself as well, and I'm not really a person that understands fashion at all, to be honest. I'm learning as well. I just really love how they can get everything going. There are some ethical issues which could be a catalyst for further drops, a lot of volatility. I mean, seems like it's holding up now. Nice little chop here. Either break out above 350 or so, or break down above below 300. 350 and beyond, probably to those recent highs at 430 or 308 and below. And then maybe try one little flash here to 230s, 250s maybe. You will very unlikely be able to catch that drop. Yeah, really. I mean, I'd be interested in taking 260s as well. So little risk. And even if it blows up, the upside, easy double. I think next is worth double these guys. Yeah, more than double. 2.5 times these guys. And I can see Boohoo taking over next business. Going entirely beyond just the trade. I think Boohoo can easily be a £10 billion company. If not, much more. I don't have a position right now, nor long or short. If anything, I'm very neutral at its current valuation. But it will be interesting to see how things go. It doesn't clearly work in the value or the growth category, but it's more towards the growth. So that will be interesting to see. I wonder where they were trading at. Well, 2017, 260s. They have a good premium being attached to them as well. which is interesting to see. I'm gonna pull up Bloomberg real quick. Just pull up some of their financials, and maybe we'll wrap up things for tonight, because I need to get working on a couple of writing pieces. One sec. Just gonna go grab the other phone. Perfecto. Okay. And my code for Bloomberg is... I can't show this stuff on screen, but I can infer, because Bloomberg is a platform that costs, I think, upwards of $25,000 a year. So they are very strict on their rules about sharing stuff. And respectfully, I'm following those rules. I just want to see about Boohoo. I know everything seems to be pointing to the right direction. It's just switching factories is a bit of a doozy in terms of its costs. Will it hit profitability? Will they have a surprisingly higher cost of sales than you'd expect? I'm not sure. If that does happen, I don't really care. I'm more interested in the fact Boohoo Man apps, or the app. I find it comforting to use. I find it quite nice, oddly. And if I do, I keep thinking, what about anybody else who is not really interested in this stuff? Let's have a look. And their numbers speak for themselves. Let's see. Make sure I got this in pounds. Market cap $4.25 billion. I don't know if that's updated because it says 4.06 here. Profits in 2020. £71.8 million, 2019 £57.2 million, 2018 £31.7 million. Expected to make over £100 million in 2021. Revenue is expected to go from, let's see. Revenue is expected to increase 39.7% year on year for the coming 2021. 40% is nice. They did 47.8% growth 2019, 44.1% growth 2020, 39.7% is the expectation. I think that's £500 million revenue growth versus 2020 to 2021. That's the expectation. The year before was £400 million. So a larger nominal figure, lower percentage number. I think 500 million is far too small. Let me have a look. I'm going to check up on a couple other stats, but I have to use my spreadsheets here. Let's see. What cells does that element have? Oh. Wow. Yeah, I think they could double their sales in the next 4 or 5 years. If I'm being perfectly honest, the whole business model being online, yes, there's a fear of online taxes, online sales tax, which could probably hit them at some point in the future. But any weakness is easy pickings with a company like Boohoo. That's why I wanted them in the 230s, 250s, maybe in 260s. People think I'm crazy for that. Well, here's the thing. I love the company. If I can get that discount, I'm getting a company I love at an amazing price, which means I can sleep at night knowing that there's a huge amount of potential for me being involved in him. Just buying the shares simply. We'd seen some crazy bounces as well, 130 something to 428. And even after that COVID stuff, doubling from lows and literally almost doubling again. So it seems like it's holding up those points, but are we going to have some form of retest to say the 270s, worst case. Yeah, worst case here probably. 247, 270s. I'll probably buy 2 blocks. Get myself a nice bit of exposure to these. I think I've been keeping up with the chat. Can you take a look at Link BTC on the 4 hour? The massive falling wedge. Yeah, I'll have a look. I don't normally trade. Well, I don't really trade crypto at all. I'm more on equities than anything. Look. Is this Chainlink? Are we talking about the right one? All it looks is it's just in a clear downtrend. I mean, if anything, I reckon it's going to retest 0.36889. Next point mentioned before. I mean, yes, there's a lot of upside if for some reason something happens for it to reverse. But the obvious direction is down there. But by taking what 0.0002 points of risk to only make that, if you're shorting, isn't great. To go long, you're going long in a clear downtrend. So really, this isn't something I'd personally like to trade. But take what you will from that. I like Boohoo a lot. I really do. I want to look into its segments. Yeah, let's dive a little deeper. Okay, 2020. Boohoo's main business. So Boohoo, the female version, and Boohoo Man. £600 million of sales. Very little. I don't understand why it's only 600 million versus the whole game. It's very little. Pretty Little Thing, that's exploding. Pretty Little Thing went from 374 million in 2019 to 516 million in 2020. In 2018, it was half what it was in 2019. In 2017, it was less than 1/18 of that revenue that it was in 2018. 2017 to 2018 was a huge explosion in Pretty Little Thing revenues. It seems like Boohoo has these businesses that just hit with a consumer and don't stop growing. For such a volatile stock, it has such great financials, man. Wow. I mean, I find it weird how the directors sold PLT to the company. That was a bit weird. But it's growing. I just worry, is there a hole in there in the future? As a shareholder, you wouldn't like to be pawned off a business. You'd like the business to be like, all right, yeah, we'll do a deal that favors everybody rather than overpay at the time. Could be cheap now, but you're overpaying definitely at the time of sale, which isn't great for management, or our perspective of management rather. As the average sales, 2019, £49, £41, £40. Those are big sales. Not much room for growth there. Average numbers of active accounts. Ooh, that's rising. Nasty Gal went from 0.9 million to 1.8 million. Where's their revenue gone? 47.9 million to 98.8 million. Nasty Gal's also growing in Australia. I remember reading some stuff about that. Let's see what the users are looking like. 5 million to 6.3 million. Pretty Little Thing. Revenue growth is much more than that growth. So you're getting customers staying despite any issues. Nasty Gal, cost of sales is up. Oh, let's see. 27 million net gross profit in 2019 from Nasty Gal. 53 million in 2020. Good retention. Much better than before. Pretty Little Thing, let's see. 204 over 374. 284 over 516. a 2/3 to 3/5 ratio. Yeah. The best margin business is what I want to find. I think Pretty Little Thing has the highest premium attributed. Over 50%. Yeah. Nasty Gal's way too small to even include it. Boohoo as a whole is roughly 50%. So yeah, Pretty Little Thing. That's what I like to see. I want to look at percentage growth without estimating. 600. Change in there. 38% revenue growth in in Boohoo. In Pretty Little Thing, revenue growth hasn't been higher, but it's much more of a profitable business. About the same revenue growth, but Pretty Little Thing makes a fair bit more money. Gross, not net. That's really cool to see. I didn't know that before, you see? You learn something new every day. Whoa, this has been going on very long. I have to be somewhere tomorrow morning and get some other stuff done tonight. But it's a little update on the markets. A couple of highlighted stocks that I'm looking at. One I regret not getting into was Ferrexpo. This move here, clear signal for me to buy. I didn't buy. And look, now it's 100 pence higher, 35% at least. Could have been gained. On the position size I was trying to get on these guys, we are talking £1,200. And I still would have held because I see it doing all-time highs. Massive, massive generator of cash. Shame we missed it. GNC as well. We didn't get an allocation here, but we did elsewhere, so that's okay. We wanted this move. It was a lagger of the breakout. I don't think it will maintain there. Jumia we couldn't short, I'm pretty sure. And Baba is trying to hold up. That I don't think will though. Then reverse. Otherwise we're buying on a clear break, new range. That will probably be it. Jinko Solar. Trying to hold up. Might not. Wayfair. Still holding up, but not too strong. AO. We need to hear more details about their financials. Probably will be the catalyst for it to break down. This is growth as well, surprisingly. Unsurprisingly, rather. That's probably it. I want to find something more about Boohoo real quick. Let's see. So main expenses. Operating. Yes. Yeah, that amount that's being spent goes up from... But if the UK was a prime example elsewhere, which they are, Pretty Little Thing is trying to do a thing in... Well, yeah, I think they are. Nasty Gal and Pretty Little Thing are trying to do a thing that Fashion Over does with influencers, but actually cheaper, which is nice. Fashion Over is mostly in the US. Huge market. Even bigger than the UK's. Why not go there? Average number of active accounts. So some may go over 8.9 million in Boohoo, 6.3 million in Pretty Little Thing, and Nasty Gal has 1.8 billion. Sorry, million, not billion. 1.8 million people. So if you add that up, that's roughly what, 8.1, 8.9, 16, 17 rather. 17 million people. It's not actually that, because some use Boohoo and PLT. Some made accounts, didn't use it, but this is active number accounts, so they do now. Okay, 17 million. They basically got a fair chunk of the UK on lock. ASOS is a serious competitor. ASC. How are they doing? Well, worth a little bit more. Personally, I think ASOS is going to lose this battle. I think Boohoo's going to take over in the long run. But investors are more confident buying ASOS than they are buying Boohoo. I think a pairs trade short isn't even a good idea because they'll both probably increase in value as the market does. I'd be less confident in ASOS. I feel like ASOS is what everyone says is a safe company, but I think it's the other way around. Boohoo just has a bit of volatility on its shares. Nonetheless, I think that's us. Ooh, Spotify's got locker room. Wow. That's crazy. Well, yep, that's it for the analysis on Boohoo. I think they can go beyond the UK, and they already are doing. That success is exactly what determines whether Boohoo's worth 10 billion plus in the next year, 2 years, 3 years. I'd say 2-3 years is more a clear point. That's what I think will happen. Do I get in? Depends if I can get a fair enough price that makes sense for me to take that risk. But I still believe it will be at 10 billion very, very soon. It will be the equivalent of Next, if not bigger, Primark, all that stuff. Imagine instead of having to go into a store. I know people say, I want to go in store, I want to go in store. But as busy as your life gets, you can't go in store when it's closed, like now, for example. When they reopen, you can. Imagine wanting to go into a store, being like, oh, it's too far away, all that effort. I know what my size is. I'm going to get this. I'm going to order it. If I don't like it, I send it back. Easy. They send my money like that within the week. It's literally the Amazon structure. People could say, oh no, with Amazon, you could order, you have to go and see how the phone works. Nope. I bought my phone. The last one I changed to. I bought it on Amazon. I Googled a little bit and stuff. Found people reviewing that stuff. Bought it. Don't want to see how it works in the store, how it looks like. No, you can see from the internet. Clothes, you can see models wearing it. And all you need to do is buy if it suits you. If it doesn't suit you, you can still refund, and it's very cheap, so you don't have money stuck in. Don't spend £9 on a hoodie. Ooh, some people spend £30-40 on a hoodie that is of the same quality, in my opinion. I think Boohoo can still make money on that. That's amazing. They could even up their prices. Obviously, it wouldn't make them competitive now, but they are a household name already and are becoming larger. I don't hold Boohoo shares, but that's my view. I think Boohoo will overtake ASOS, assuming that this shady accounting stuff comes to an end. If the management kind of does some deals where they're not acquiring a business that they own a stake in. Mark Armani owned part of Pretty Little Thing, sold his stake to the company, and then eventually sold part of it, then eventually sold all of it. That to me is a bit weird. But then again, it is a growing business. We don't know exactly what element of truth is there, what is dodgy, I don't know. That's speculation. All I can say is that management's been great in terms of building the company. Outside of that, everything's amazing. So it could have a problem, it could blow up, those are the risks. But in the long run, the trend is towards there. 2.5 times more than where it is now, is what I'm thinking. In terms of the chart, all-time highs, breakout to all-time highs. Test them, breakout. And that's where we get towards what 2.5 times is. £8 a share. I'd probably say £8 a share is very, very likely for Boohoo 2-3 years down the line. Assuming there's no dilution or anything, which they could do, but we'll see there. Anyways, I've been your host Ryan Kia from quantiumresearch.co.uk, and this was a stream where we looked at the market. We looked at a couple of companies. We started off with, we didn't look at small cap sectors, we'll look at them another time. We looked at the S&P 500 sectors and a couple extras there as well. Gold, relations, commodities, bonds, and the likes. We looked at the UK's largest 100 companies, a couple of the outperformers, a couple of the underperformers, a couple of things that I just had on my list, Archegos Capital and the blow up, and a couple of companies affected by that, the likes of Baidu, Viacom, Discovery, Tencent Music Entertainment, and VipShop. Is it VipShop? I've never actually heard of this business, but they had some rally. Oof. 3x in 4.5 months. Oof. And what else did we look at? Tech. We didn't look at the ETFs, but we'll save that for a future occasion. Nonetheless, I have been your host, Ryan Kia, with quantiumresearch.co.uk. And thank you so much for coming along. We will be back at some spontaneous occasion in the future, but for now, hope you enjoyed the live stream, and this will be uploaded onto YouTube as well. And yeah, have a good day, have a good afternoon, evening, night, whatever it is where you're at and when you're watching this right now. And also don't forget to check out quantiumresearch.co.uk, our website, which, if I pull it up right now, let's pull up our website. We have free articles on all sorts, anything from TA, a couple stocks, where we think it's going. Our writers, we have some great writers like Noah, amazing guy. Pleasure to work with someone like him, wonderful guy. And he wrote a recent piece on Distill PLC, which is quite interesting, and aims a name company. That's the alternative investment market, a company in the drink space. Look at that. I love some of Noah's writing. It's just so great, and it deserves so much recognition. So you should definitely check out some of Noah's pieces on our site. We've also got some videos that I have made and recorded. Little bits, fundamental analysis, balance sheets, debt, anything. Boom. Those are videos where I walk you through whatever. They're all free on the site. We put out some free stuff to those that need to know the basics. Because if you can't afford to pay for things like our reports, that's fine. It's understandable. When I started trading, I didn't have the ability to do that at all. There were some great people in the community that made amazing reports, but I didn't have the money to pay for that stuff. So look at these beautiful videos we have created, telling you literally everything you need to know about the charts, free on our site at quantiumresearch.co.uk. So what I'm going to do is I am going to copy that into chat. Feel free to sign up to our emailing list if you want. Actually, I'm going to copy the TA section. Yeah. Because a lot of people on here like charts, considering this is TradingView. Check that out. It's all free. It's for the community. If you like paid reports and stuff, well, we have something called QR+. I'm going to flip through it real quick. Don't want to plug it too much, but we release reports for 3 different things. Let's show. We also have a conference call option, which I lead, talking through all the markets, pre-made preps, presentation, and we can go from there. And also the trades we make on our own portfolio, which is a nice thing to put out there, which is launching soon. But for now, we have a £10,000 trading account, which we also trade live. But at the moment, we've kind of had an investment structure because the markets are very choppy, and we've been working on some other stuff too. We have a weekly report, 3 different areas. You got stock markets, 7 major global indexes, amazing. 6 major currency pairs on the FX update, and 5 major cryptocurrencies. For those who like crypto, we look at Bitcoin, Ethereum, Ripple, Bitcoin Cash, and a Litecoin. Where do we think they're going? This is only £10 a month. £10 in dollars is $14 a month, which is 2 coffees probably. And we all know that if you go outside and have a coffee, you don't have 2 a month. You probably have 2 a week, especially for folks like myself that need to be awake most of the day, UK session and the US session. But that's what we have. If that's something that interests you, check out our site. But if not, check out the free stuff as well. That's what we put out. We have a team of very, very young and talented writers, and we're still building our team. Arlim has an amazing skill with his writing style. Look at that. A lot of M&A focused work. Apple, there was something about their mergers and acquisitions policies and their recent deals. I think there was a point here. Did they acquire a business? This is something about an acquisition of the Dark Sky company. Recent. Ooh, weather forecasting helps her out. You know, these things that you don't normally see. Arlen writes some really amazing articles on. We got Plug Power, nice one, really popular one for a lot of traders right now. Arlen looks deep into the whole thing. Look at that. There are numbers on top of numbers. These are the most talented writers I've ever come across in my life. Somebody who works with people who write academic stuff as well. I know that this is amazing. A couple of nice charts too. Luke, Mo, all the folks here. Amazing stuff to see. If you want to check that stuff out, check quantiumresearch.co.uk. But for now, I've been your host, Ryan Kia of quantiumresearch.co.uk. Thank you, Amin Shomel, for the follow. Thank you, NTU5247, for the follow as well. You're seeing two of me. You see me here, and you see me there. Ooh, I hit my arm against the bottom of the table. Nonetheless, thank you everybody for coming along. If you want to follow me on Twitter and also follow our page, you'll find our page through me. I'm here at RyanKia2. That is my Twitter username. Just in case for some reason you miss that link or you want to find our site, give me a follow on Twitter. Let's stay in contact. Trader community, all that. And yes, look forward to future streams. Appreciate all of you. I've been Ryan Kia with quantiumresearch.co.uk and also Quantium Research Limited. Peace. Happy trading.